the $57 billion giant you have never heard of. While everyone is talking about the latest tech stocks, there is a $57 billion company quietly dominating an industry that touches every American's life. You have probably never heard of Cencora, but every time you pick up a prescription, there is a good chance they had a hand in getting it to your pharmacy. Here is the thing about pharmaceutical distribution. It's invisible by design. When your doctor prescribes medication, that drug does not magically appear at CVS or Walgreens. There is a massive, complex network moving billions of dollars worth of medicine from manufacturers to healthcare providers every single day. And Cencora, trading under ticker COR, is one of the giants running this show. Most investors ignore companies like this because they are not flashy. They are B2B, they are complex, and frankly, they are boring. But boring can be beautiful when it comes to consistent returns. Let us talk numbers. Cencora just posted 12.8% year-over-year revenue growth in their most recent quarter, with total revenue now exceeding $310 billion annually. In a mature industry, that is impressive. But here is what is really driving this growth: specialty drug distribution. The pharmaceutical world is getting more complex. We are not just talking about generic pills anymore. We are talking about specialty medications, biologics, and personalized treatments that require specialized handling, storage, and distribution. These are not your grandfather's aspirin bottles. These are high-value, temperature-sensitive medications that can cost thousands per dose. Cencora has built the infrastructure to handle this complexity. They have got specialized facilities, cold chain logistics, and the regulatory expertise to move these drugs safely from manufacturer to patient. And as the pharmaceutical industry shifts toward more specialized treatments, Cencora is positioned to capture a larger share of each transaction. But here is the real kicker. Demographics are on their side. The U.S. population is aging rapidly. By 2030, all baby boomers will be 65 or older. Older Americans consume significantly more prescription medications than younger generations. We are talking about a sustained, multi-decade increase in pharmaceutical demand. This is not a cyclical trend that might reverse next year. This is a demographic tsunami that is going to drive consistent growth for pharmaceutical distributors like Cencora for the next 2 decades. What makes Cencora particularly interesting is their network effect. They have built relationships with both manufacturers and healthcare providers over decades. Switching costs are high on both sides. Manufacturers need reliable distribution partners who can handle regulatory compliance and reach thousands of pharmacies and hospitals. Healthcare providers need suppliers who can deliver consistent availability and competitive pricing. This creates a moat that is difficult for competitors to cross. It's not just about having warehouses. It's about having the relationships, the technology, and the operational expertise to manage this incredibly complex supply chain. Now, this is not without risks. Pharmaceutical distribution operates on thin margins, and there is always regulatory pressure on healthcare costs. Generic drug pricing can be volatile, and there is always the threat of new competitors or changing industry dynamics. But for investors looking for steady, consistent growth in a sector that is essentially recession-proof, Cencora offers something unique. They are not trying to cure cancer or develop the next blockbuster drug. They are the infrastructure of the pharmaceutical industry. And that infrastructure is getting more valuable as the system gets more complex. While everyone else is chasing the next meme stock, maybe it's worth looking at the companies that actually move the economy forward, one prescription at a time. What do you think? Are boring, consistent growers like Cencora worth a spot in your portfolio? Let me know in the comments below.